Hey everybody, Preston Bryn here with our Trader User Group, a weekly roundup. This is for the trading week ending March 18th, 2016. What I've got on the screen here, well, let's get it back up for you guys. What I've got on the screen here is the S&P 500 E-mini futures. And I wanted to just show you a couple of things here and why I think we're probably going to have some market weakness coming up in the next week, maybe near term. You can see that we've had a nice run to the upside. In fact, I had our members in our user group, going long on February the 11th into the 12th, and we got long in this area right here. Now, we did the same thing in the energy markets, and we kind of over allocated. I know I was over allocated into the energy sector, but it turned out to be, in hindsight, a very good move. But we got signals that showed the markets were just going to blast off. Now, we didn't know how high. We cleared this first resistance hurdle right here, as you can see by this shaded line, once we got in down here. And once we cleared it, then clearly the next resistance hurdle was right here. Now, all along the way, I had this all marked out for our group. And I said, if we can blow through these areas, then we're going to go up to the next area. And you can see up here with this blue dashed line and this red dashed line, the blue dashed line is the actual opening price of 2016 for the E-mini futures. And the red dashed line is the high price for 2016 for the E-mini futures. We are sitting right now just slightly below, a couple of 25 cents or so below the opening price for 2016 for the E-mini futures. Now, we poked our head up above and we came down into close. So we've had a really good run here. Now, I've been, once we cleared this hurdle right here, I started tightening my stops a pretty good bit with this up move. But now I'm going to expect a little bit of weakness coming into this next week. This past week was a triple witching. I've seen some folks in the press call it quadruple. Call it what you want. But we had monthlies expiring. We had quarterlies expiring. We had futures contracts expiring. Now we're coming out this next week. Everybody's over to the June expiry period. Is the front month for the S&P 500. Other futures, quarterlies, and we're now into a new monthly series. And typically post triple witching or quadruple witching, whatever you want to call it, we see a little bit of a weakness and a little bit of a pullback in the markets. Now, the fact that we've had this huge run right here tells me that, I wouldn't be surprised, and I keep telling our members, and I've been telling them this entire run up, that I would expect a little bit of a pullback. Now, I would be what you would call a reluctant bull. Clearly, we had the signal, and I took it. The overwhelming move in the market was down, but when we got our signal down here, boom, I went long. And being agnostic traders that we are, we don't try and understand any logical sequence of where the trend is going to take us. We just know we want to be on the horse riding it in the direction that is pointing. And right now it's been up, but I'm tightening my stops further. I'm not getting out. I'm tightening my stops further because we could probably run a little bit higher. But again, tightening stops, I wouldn't be surprised to see us have a nice little pullback over the next 2 or 3 weeks as we round out the end of Q1 and go into the beginning of the second quarter. Now, why do I say that? Well, let me just show you a couple of things that I'm looking at on the screen here. And the markets, let's get the screen back up for you. The markets, you ever wonder why technical analysis works? I mean, if you take a step back and say, gee, why do these technical patterns work? And why do they repeat themselves again and again and again? And why are there symmetrical patterns in price action? If you go back in time and look at charts, doesn't really matter what asset you're looking at. Doesn't even matter what time frame you look at. Just look at a chart and you'll see symmetrical patterns repeat themselves again and again and again. Why is that? Well, all symmetrical patterns is a reflection of the bulls and the bears, fear and greed, money in, money out of the market. And as you know, if there's more buyers than sellers, then price is going to move up. If there are more sellers than buyers, price is going to go down. Sellers will just drive the price lower. And bulls and buyers will drive the price higher until a point where human nature steps in and there's a natural area to take profits or minimize losses. So that creates these symmetrical technical patterns that we all love, and that is why you'll see a lot of very smart traders selling to gullible, what I call rat brain traders, where they jump in. They're always late to the party, late to the dance, last one to sit down when the music stops. And they're happily buying at peaks and they're happily selling in valleys. And that's where the age-old, buy low, sell high comes in. It's very easy to say, but it's very hard in practice to do. So now, if we look at this chart here, and let's just come back here and look at this pattern right here. Back in August, we had this huge drop off right here. Okay, I consider this a double bottom because this was a flash crash on Monday. We came down, but the markets moved back up again. If you look at the SPX, the cash index, it doesn't have this super low that was made on the 24th. Is more of a double bottom. But then you can see we blasted off right there. We had the divergence and boom, away we went. And we moved about, let's call it about 250 points, give or take a couple of points or so, from that bottom until we started to, go into a period where, we just couldn't make it back up, and then we gave it all up again and we started that teardrop shape to the downside like that. But we moved about 250 points. And a lot of the folks that got long right here stayed in this pattern, and it just started moving, thinking that when this pullback here, more longs poured in. We did make a new high, but they stayed in, came back down, kind of did a retest, thinking that it would come back again. We made a lower high, right? And then next thing you know, thinking that a lot of the longs, thinking that the price would hold up here, it didn't, and next thing they know, they held on until it came all the way down here. And you can see this volume right here over price. There was a lot of shaking going on right here, a lot of exchanging hands, a lot of rat brain traders that missed this move right here jumped in right up here. And the smart money that got in down here, including our users in our user group, were more than happy to sell in this area right here, take our profits and stand on the sidelines. But there was a lot of volume here at that price level, tremendous amount. And then unfortunately, a lot of those folks stayed in as the markets just went down, kind of shell shocked. That's kind of the rat brain way. And as meanwhile, we were getting short in this area here as the markets were moving down. But the point I wanted to show you was that it was a nice move to the upside here. All right, around 250 points. Now, if we fast forward to today and we look at the pattern today, and let me get the screen back up here for you guys. And we'll look at this move here off this low here. And let's just move this like this off the low here and just kind of do a similar kind of move. You can see right now that we're very close to reaching that apex, very similar to last August. Now, that's not to say that we can't run up a little bit higher or fall a little bit short, but you can see all of those buyers that were still sitting up in this area right here, or rat brain traders, and a lot of shorts coming into the market. So there is still a lot of overhead resistance sitting from this 2060 to 2080 area should we make it. And this point right there was where the markets had a natural pullback of a pretty good little bit. Okay, so I believe we're running into this natural zone here that's going to show some weakness in the markets. Now, we cleared the 200 EMA. The 50 EMA has got a nice trajectory to the upside. The 200 EMA is kind of just about flat, slightly poking up, but basically flat. And we've had this nice run off the low here. We had the same divergence. We got our trigger right in that area there, and boom. So now the question is, how high will the markets go? I believe we're going to run into a significant amount of resistance here before we have a little bit of a pullback. Now, what would make me happier with this market what would make me happier would be I would like to see a little bit of a pullback here where we come back perhaps even to this, what I would call on this daily chart, a larger S1 zone. This would be our support zone right here, right? Around 1980 kind of splits the difference right in that area there. You can see a lot of volume sitting in that area there, and then a lot of volume here. These fingers of volume represent bulls and bears duking it out at resistance levels. So we've got a lot of resistance sitting here. If we can come down, and keep in mind that the 50 EMA is always going to be moving up as we're moving forward in time, because that's just the condition that we're in now. We're going to have a moment of truth in this area here. Now, again, um, we are trading this side of the chart, which is blank, and we're basing our actions on the patterns and where potential buyers and sellers are lurking on this side of the chart over here. So if we can find support here and start moving higher and start blowing through these resistance levels again, then I think the odds favor us taking this out, and perhaps we can run up to the 2100 level and challenge these areas up here. That would be our next area. If, on the other hand, we come down, we make this run here, we move up, and we cannot take out that pivot high from whenever it starts rolling back, and then it comes back down again, then I'm going to start looking at that kind of pattern to say, are we going to start rolling off into the summer months again and start the same pattern that we had last year? So I don't know how this is going to play out, but this is what I'm going to be watching for. Okay, so to net things out here, I'm looking for a little bit of weakness going into next week, but longer term, over the next 3 to 4 weeks, I would not, again, be surprised to see price action come back down into this S1 zone around the 1980 area, 1970 area. And then I'm going to be looking for these buyers or this volume here to turn out to be buyers for us, and then holding us up and then moving back higher. If that doesn't happen, then you're going to see we're going to come down to this next zone down here right around 1930, and then, and again, down in that area there, you can see the buyers here. You know, that's where buying volume really peaked, right in this area right here. So we've got two major areas here that I'm going to be looking to see that we can hold up, right? So as we move back down, I'm going to be looking for this first area here, I would call S1, holding up for us, and if not, then S2 would be our last shot. And then you can see the buyers really drop off as we fall down here. And there's not a lot of buyers in here, which means if we break that area, it'll move pretty quick. We'll have a scare the children moment, and then we'll find support here, and then we'll see if we can gather our wits and move higher. Now, being agnostic, I don't really care which way the market action goes. And you can't guess. All you can do is say, this is where I'm expecting support, this is where I'm expecting resistance. And if we get resistance in this area like I expect, and we start rolling over, I've got my tight stops, I will probably just take my profits and then watch the markets, and then I would expect support right here. If we get support and we start rolling up, then I will start adding some longs again, expecting us to move higher. So I'm going to follow the trend that we get here. And we've had some nice trends, guys. I mean, you know, for those of you that follow along with what we do, this has been a really great time for us. I mean, that is a great move right there for us. That is another great move for us. If you're on the right side of the camel as it's moving forward, it's a great trend for you. And that's what you want to do, okay? And again, this is on a daily chart. So for our members, we break it down and we go into the 2-hour and down to the 15-minute to look for better timing for entries and exits and things like that. But you guys get the idea. So, you know, that's kind of where I am sitting right now on the S&P 500. And I'm looking at this area right here. And if we look at a similar situation here, I'll blow it up a little bit wider so you can see it. You can see the 2016 open price of 2037.75, and we actually closed at 2037.50, 25 cents below our opening price. We poked our head up and came just short of the 2016 high. But this is where we're sitting here, okay? And if you'll note, The last time that we did this, we had a move right here from about right here down to a valley of around 112 points. Okay, so that was about 5.33% from that move right there. I'm not suggesting that's what's going to happen here, but a symmetrical move would put us right there, right in the middle of our S2 zone right there before we caught wind and moved back up. So another thing I'm going to be looking for is that if this can hold right here, our S1 zone, okay, if this holds up for us, then I suspect as we move higher, I would anticipate taking out the 2016 highs if we don't take them out early Monday or Tuesday before a potential pullback. Okay, if we blow through this, then we're probably going to match that symmetrical pattern and come down here to an S2 zone. Okay, so hopefully I didn't confuse you guys, but I gave you some things to really think about and looking at the symmetry of the markets. And again, symmetry is just simply a reflection of fear and greed. That's all it is. And that's why patterns historically will always repeat themselves. It's not 100%, but you're looking for that edge of where you can play the markets. And once you get that movement, then you just, you essentially want to follow it along and then just be a follower of the market action. You can't guess because that's just a 50-50 shot at best. All right. So that's kind of where we're sitting right now. If we look at the worst performing index, let's look at the Russell. If we look at the Russell right here, okay, and I am also watching this very closely here. The rut is well below the 2016 open price of 1132, as you can see. It's also well below the 200 EMA, the 50 EMA. So it's above the 50 EMA, so they're converging right in this area here. Again, we got the same signal, and for those that were a little bit more bullish and wanted to really just make a good solid run, I suggested a 3x small cap bull would be TNA, Tango November Apple, is a great play because it follows the Russell, but just in a more turbocharged fashion. But now we're coming up. We took out a prior pivot high, and we're sitting in this area here. It is susceptible to another down move. And then Nasdaq, which was leading the pack until we came into the end of Q4 of last year, moving in. You can see Nasdaq is sitting just above the 200 EMA. Okay, just above the 200 EMA. So these are just some of the ones that we're following here. I would like to see the Russell gain more strength. I would like to see the Russell money coming into the Russell, giving us more of a risk-on type of environment. But we've had such a bullish move off the February 11th lows. We've made some great money, primarily in the energy market and the oil futures market. We've traded gold. I've been in and out of gold a couple of times this year. Gold, we've got some great things that we're looking at in gold. The currency market, I said in Q4 of last year, 2016 is going to be a great year for currencies. We've got some things going on in the US dollar and in the euro and the British pound. We're looking at the yen. I mean, it's just there are things setting up all over. Same thing with the oil markets. We're heavily in the energy right now. Tighter stops, expecting a little bit of a pullback. And we've got some trades on in the agricultural market. So, folks, if you're not a member of our group, I highly encourage you to come in. There's an offer associated with this free weekly update. Come on in and check us out. If you do, then I think you're going to enjoy it, and it'll certainly improve your odds or give you a little bit of an edge as we go through the end of 2016 into 2017 as far as playing the markets. All right, everybody, I'm not going to go through the gold and the energy or precious metals, energy, the ag markets. There's some stocks that we're looking at also that look pretty interesting right now. So again, if you're a member, I highly encourage, or if you're not a member, I highly encourage you to come on in and check us out. We've got an international audience. We trade all the major food groups From energy to precious metals to agriculture, we've done some softs, although we haven't made any trades in the softs commodity market probably for the past 4 months, but there were some great moves in sugar and now in coffee. So we're looking at those as well as the treasury market. Bonds are doing some really interesting things right now. So I think there's going to be some stuff setting up there too after this post FOMC. So come on in and join us. I think you'll have a lot of fun. Otherwise, everybody have a great weekend. And I will see you on our next update the following week. For our members, I'll see you tomorrow night for our weekly market watch, what we got coming up for next week. Have a good one, everybody. Ciao.